Hello, this is Jeremy Wagner of Daily FX Education, and I'm here to talk to you about carry trading. Now, before I get into carry trading, I want to ask you a question. Why is it that you're involved in the Forex market? Why is it you want to trade Forex? Is it because you want to go to bed one night, wake up the next morning, have a 1,000 pip gain? Obviously, that is possible in Forex. I've seen it done before. But when it comes to carry trading, carry trade really isn't that type of strategy. It's not the type of strategy where the next morning you could go at the office cooler and you could talk about these massive gains that you made overnight. Carry trade is a buy and hold strategy, so it requires a lot of patience and even requires discipline in going out and finding the right conditions. And that's really the whole essence of carry trading, is making sure you have the right conditions. If you are invoking a carry trade and the conditions are right, it can be a very successful strategy. So what are the conditions I'm talking about? Well, first of all, it's got to be a risky type of environment. I'm looking for a sentiment or a mood of the market where traders are in the mode of wanting to take on risk. And since I started my trading in the stock market, I naturally go back to the stock market and look for that as my barometer and my thermometer of indicating whether traders are in a risky mode or not. So if stocks, in essence, are in an uptrend or moving up, then I would say that traders are in a risky, risk-taking type of environment. But if the stock market seems to be in a downtrend, seems somewhat similar to what we've been in here lately, then that's a risk aversion type of market. And investors are shunning risk. They're running away from it very fast. And in that environment, a carry trade will not work. And so since carry trade is a buy and hold mentality, I'm looking for an interest rate differential. And in addition to the possibility of gaining on the exchange rate, I'm also looking for that carry interest. I'm looking for that interest to be collected every day. And so the larger the interest rate differential, then the greater opportunity I have to earn interest. So I'm going to use the Swiss franc, or I'm going to use the Japanese yen as the funding currency. And then I'm going to look to a higher yielding currency, or a currency that has the greatest potential to increase over the next several months. I'm going to look to that as my currency to invest in and then collect the differential on that. But once you've got the market set, once you've got the mood of the market, you figured out your currency pair, it just simply boils down to money management then. It can be, you can let the market do all the heavy lifting for you, and you're just simply managing your trade. So since we've been in somewhat of a bear market here lately as far as sentiment and the stock market, I've drawn on here a downtrend. And let's say this particular currency pair that I've got indicated by this black line, let's say that the direction of the carry is to the upside. So when prices are moving down, we have risk aversion. When prices are moving up, we have risk-taking environment. So when am I going to initiate this trade? Well, after this down leg, I'm going to be looking for a series of higher highs and higher lows to be my clue that prices are now in an uptrend. So we can see here that we did get a higher high that was created at this point right here. And then I now have a higher low relative to the low we see back here. And at this point, I'm going to be looking for prices to break above this high indicated by the green line. And so once prices are successful in breaking up through that area, I'm going to initiate my trade. So let's call it 80 is where I'm going to get into the trade. And since my swing low in this example is down here below this level, let's call it the 77.50 level. Now, in real trading, 250 pips for a carry trade is pretty tight. You're probably going to want to look for 250 to 500 pips because, again, the whole purpose of carry trading is to earn that interest. You'll want to be in that trade a very long time, several days, several weeks, several months. And a lot of these currency pairs, they could chew up 250 pips in like a day or two. So you might need 250 at a minimum, possibly up to 500. And so in this situation, I'm going to enter this trade at 80. And when it comes to the money management, I'm not going to use a limit. So here's my stop at 77.50. I'm going to manually trail my stop along the way. So I'm not going to come up here and I'm not going to look for an area and say, okay, I want to get out at this point. What I'm going to be looking to do is just let this wave carry me as far as it can, and then I'm just going to trail the price and let my trailing stop take me out of the trade. So how do I trail that stop? Well, every time that the price moves up 250 pips, so once it goes from 80 to 82.50, then I'm going to move my stop up 250 pips. So once the price gets up here to 82.50, I'm going to move my stop to 80. And then if I'm fortunate enough to get prices to move up a little bit higher into this 85 level, then I'm going to move my stop up to 82.50. And so let's say in this example that a fairly short carry trade, it went up to that 85 level and it came back, and I'm going to get stopped out at 82.50. So in that situation, I ended up making 250 pips, in a few days, hopefully. So, if it is a very risky type of environment, these carry trades could go on for a very long time. There could be a lot of interest that could be accrued over the ensuing days. And then, of course, as more people get onto the bandwagon of playing in the direction of the carry, well, then naturally the exchange rate tends to rise up as well. So, but picking the right market condition is the #1 key to that carry trade. And I want to thank you for watching this video on carry trading. I want to wish you the best of luck in your trading as well.